All right, chances are a partridge in a pear tree and 3 French horns are not on the top of your holiday list or anyone in your families. They are most likely have been replaced by iPads and flat-screen TVs. But still, for the last 27 years, PNC Bank has been tracking the price of the items in the 12 Days of Christmas song. So we're going to see where the index in this year is priced with PNC's James Dunigan, who joins us from Philadelphia. Jim, thanks so much for joining us. Pleasure having you. Safe to say that most people don't want these things, but it's still, this index has become somewhat economically significant, hasn't it?
It has. Over those 27 years, as you talk about, we've seen a lot of times where it correlates with the government CPI. Not the case this year, as the index is up 9.2%.
Let's talk about inflation and what you've seen over the last 27 years, and maybe more importantly, what you've seen over the last year or so.
Well, as we look at the prices of the items in the 12 Days of Christmas again, the true loves will likely be singing the blues this year. Many of the items, top of the list is the French hens and turtle doves. French hens are up 233%, turtle doves up 78%. And no surprise, gold rings, with what we've seen in the price of gold this year, are up 30% in the index.
French hens. I thought it was French horns.
I know you did. That's okay.
How many birds are in this index?
That's why we love you.
You've got geese, hens, partridges.
Hey, Jim, let's talk about those French hens. They're up 233% year over year. I mean, what is that? Because of the feed? It's costing them more to feed them? I mean, explain that one, because that's a big jump.
It's a combination of factors, Carol. Certainly, feed costs have a part of it. These are adult hens, so the cost of operation is a little bit higher. But it also, as we've seen over those 27 years, a lot of it is supply and demand. And that drives year from year some of that volatility. But right. I think this year primarily around feed costs.
You know, Jim, we have a lot of fun with this report. Whenever it comes out, we all kind of jump on it. We go through it. We look at the differences. But I mean, it is kind of whimsical. I mean, talk to us about the importance of it. I mean, what's the takeaway? I think at this point, there's that debate about whether or not there's inflation. Folks say no. Look at the numbers. But we all certainly feel it. When you look at the results of this survey, what does it really kind of bottom line tell you?
We look at it with much the same anticipation as you talk about. And when I looked at it this year, the last large increase, in fact, the largest increase we saw in the index was back in 2003 when we were coming out of the recession of 2002. So I think there's similarities. Coming out of a recession, demand picks up. You're going to start to see more lumpiness in the basket of goods that you look at from an inflation standpoint. So if you look at the government CPI, you'll see many of those components up over 4 or 5%, while the majority of the index is still flat to down a little bit. So I think coming out of a recovery, we're going to start to see different pricing paces for different kinds of commodities, and consumers are going to start to see that, right, which is going to start to fuel some of those fears of inflation.
It's certainly an interesting perspective. Hey, Jim, thanks so much for joining us and breaking it down. We appreciate it.
I'm going to find out.
Always a pleasure, Carol.
Thank you. Be well.
I'm going to find out how you price Lords a Leapin'. And then
or Ladies Dancing.
I'll ask Jim here, and then you can email me, and I'll give you the answer.